Good afternoon, everyone. You're watching Market Fatafat on ETA now with me, Mubina Kapasi. Red on the screens today after almost 3 days of gain seen on the Lal Street. Sensex, in fact, is losing in triple digits. And India's largest bank, SBI, today told your network the widespread NPAs were triggered by the slowdown, but hoped that the worst of the pain in the economy may be behind us. Hear out Arijit Basu, MD of SBI, in conversation with Aisha Faridi.
I think this is one issue which the banking sector has been grappling with for the last few years. I'll just make one qualification at the outset. You mentioned PSU Banks. Yes, PSU Banks were the ones who were affected the most, but there were private banks also which got affected. Why I make that point is, it is not to say that one bank did better than the other.
You're talking like a political party now. If we were wrong, they were wrong too. But anyway.
It's not a question of being wrong. That's the point that I wanted to make. There is a reason. These are the banks which have the higher NPAs and which shot up were the ones who were into corporate financing in a very big manner. Sure. Whichever bank that was. There were certain banks in the private sector which stayed away quite a bit from what could be called the project financing and corporate financing. So the genesis of this basically started with a very rapid growth in corporate lending, and especially to very large exposures that were taken in infrastructure and other project finance. Now, capacities were built. There are two aspects to this. Capacities were built. There are many of them which continue to do well. There are many large companies which were supported. But this happened at a time when the global economy had sort of slowed down, and subsequently India also could not take that. So as I said, there are two aspects to the reasons as to why this happened. One of them are rooted into the capacity, into the demand and the supply and so on and so forth, and that had to be addressed. The other cause was the fact that when this was being done, there were certain accounts or certain cases where the banks should also have been much more cautious. And just because there was an opportunity or it was felt that there was a projected demand, so the standards that we had set needed to be relooked. So it is a combination of the two. It had affected two very large private sector banks who were into corporate financing. Two things have happened since then. One is that a lot of work has gone into repairing the ecosystem. How do we repair the ecosystem? One is, in case you have a problem of dealing, account gets into stress, the options that were available with the banks were very limited. So there were a lot of things which were done by both the government and the Reserve Bank of India. You would recall the asset quality review and so on and so forth. But a problem that the banks had at that point in time, say 3-4 years back, or little earlier than that, was that the opportunity to resolve in a manner which would enable us to come out of the problem and allow the asset to continue in a manner which is beneficial to both the economy as well as the banks was not there. Sure. So a very key thing was brought in at this stage, which was the IBC. And in a very major way, the IBC has really helped us to see that the ecosystem gets cleaned up. And as you were asking, yes, the legacy accounts which were there, most of them have been addressed. I would say almost the entire thing has been addressed. If you were to ask me whether there would be a very large account or one or two accounts which cannot come in the future, that can never be, because banking is the business of taking risk.
But you know, on that subject, and in the backdrop of the latest case being PMC Bank, the criticism is always hurled at the bank. As a banker at this platform like the Times Now Summit, are bankers the culprits or the victims? Or banks, are they the culprits or the victims?
So I think they are neither the culprits nor the victims. We need to understand how this thing operates. First and foremost, I think we need to be very clear that when banks are held to a very high standard, it is for a very good reason, because we are holding public money in trust, whatever may be the institution, and which is why the regulator also has a very important role to play in this. Having said that, every bank attempts and has to attempt to make sure that the risk management practices and the corporate governance practices that it has are of also the highest standard. And in case these two come together, that is, say for example, one of the questions that was asked was, did the credit underwriting standards, were it adequate enough? So most banks, including us, for State Bank, I can share that over the last 3 years or 4 years, we have put in a lot of measures to see that the mistakes that perhaps were done when some of these large exposures were taken are all addressed. So there are, I don't want to get into the details, and most of the other banks have done that. So it's not a question of being a victim or a culprit, because we operate in an ecosystem in the economy. Certain things which are happening in the economy are likely to affect the banks. At the same time,
Mr. Basu, nota is not the option here.
No,
it's
no.
either A or B, culprit or victim.
No.
What are banks?
So the banks are there to, as repositories of public trust, they have to make sure that they lend in a manner which is beneficial not only to themselves, they have to grow profitably, they have to manage the risk. And the NPA situation that had arisen was partly due to economic reasons, which in a way, if you want to say that...
But you know, Mr. Basu, the problem is that the economic reasons will continue. At this platform here, we've talked about time and again with all of our panelists that unemployment is at a 40-year high. You've got the growth figures, sub 5%. Yesterday it was infrastructure, today it's real estate, tomorrow it could be telecom. We've had Kumar Mangalam Birla say that on a public platform, that if the government does not intervene with the AGR payments, they will have to shut shop. What will SBI as a bank do then? Because every day there will be a new sector with a new problem.
Yeah, so what has to be done is, number one, it's not all gloom. That is something which is very clear. I think the measures that have been taken by the government over the last few years, many of them may not be coming out in economic data as of now, but we understand that they have been for a good cause. I mentioned the IBC. Sure. The way in which the IBC has empowered the banks. One large resolution we have in our favor, but it is just not that. The attitude that certain promoters had to how they will, deal with the banks.
Okay, that of course was that exclusive interaction that we at ET Now and of course the Times Network had with SBI MD. With that, we'll take a very short break. More lined up when we return. Welcome back. You're watching Market Fatafat on India's #1 business news channel, ET Now. Let's kickstart Fatafat then. We're going to flag off all the individual movers and shakers. And to do that, today we have with us Rajesh Palvia of Axis Securities to talk about the technicals of individual stocks. And Vinny and Soumya join in from the research desk. Afternoon, everyone. And let's kickstart the show with banking names. Yes, bank is a stock on our radar. Top Nifty gainer. What a massive move seen over here, 6% higher. This after the company, well, along with saying that, look, they're going to have to postpone the announcement of their third quarter numbers, have also said that there are new, a couple of investors that have come in the fray who could perhaps be potential investors for Yes Bank. Names include JC Flowers, Tilden Park, Silver Point Capital, among others. But yeah, the third quarter numbers will be pushed. 7.2% higher for Yes Bank, perhaps in the back of this fresh investor interest received. But absolutely still no clue of who the final investor list will be. That's the reason why they have also postponed the third quarter results. And keeping it with banking then, Rajesh, SBI, the bank seems to be hopeful that the worst is behind us. But yeah, what about the stock? It's at 330. It's been quite a stellar run up. Could we see more room for an up move here?
Yeah. Good afternoon, Mubina. Yeah, if you off late we have seen, SBI has recovered from the 300 level, And even if you look at the today's derivative data, a lot of call was seen as an unwinding action was witnessed in the call writers side. So looking at the setup, stock is currently trading above all its important moving average. I feel that we can see furthermore upside in the SBI in the near term to short term. So we expect that stock can rally towards 345 could be the next target in the near term to short term. One can place a stop loss of 322 to go long in the SBI at the current juncture.
Okay, 2.3% higher for SBI. And Vinny, today's earnings dhamaka is IRCTC.
Absolutely, Mubina. It is a big dhamaka result for us. Now, let's look at the PAT. It's up around 3 times on a year-on-year basis. It's at 206 crore. Revenue doing super well. It's up 62%. And, this revenue is done well across across the board. So, ticketing revenue is up 4 times. Rail near revenue is up around 50%. Catering revenue is also up. As well as tourism revenue is also doing quite well. So, overall also the set of numbers is quite good for IRCTC. Margins are up by, at 37% versus 23% on a year-on-year basis. So, what a fabulous set of numbers by IRCTC. Plus, the stock has rallied around 13% today. And we go to see since morning. Plus, the stock is been up around 400% over its issue price. So, it has been doing quite well since its IPO. And, today also it's just further adding to the up move of the stock, Mubina.
Yeah, that it did, and you're seeing a stellar reaction on the stock, 12.5% higher. And Soumya, that's the case even with another company in a niche space, and that is Midhani. What exactly were the results like?
Well, that's very rightly put by you, Momina. In fact, this one's also posted a really good set of numbers, stellar set of numbers, revenue growth of around 35%. In fact, very impressive profit growth of around more than, it actually expanded by 3.6 times. Equally good performance on the EBITDA front, also seeing a growth of around 3.3 times, and the margins expanded by more than 1600 basis points. So definitely really good set of numbers. The margin expanded from 11.2% to 27.7%. And this is what is moving the stock today. The stock's trading higher by over 4.3%.
Okay, Midhani is higher by 4.3% in trade. Ashok Leyland, meantime, yes, the quarter was a tough one, that's for sure. We did see the growth on the top line, trickle down to the margins as well. But nevertheless, Morgan Stanley is saying that, look, it's all right because there has still been aggressive cost control at play, and despite this tough demand environment, Ashok Leyland stuck its neck out and maintained cost discipline, a good cost discipline. Hence, they are maintaining their overweight stance on Ashok Leyland, target at 111 rupees per share. But again, reacting to the bad numbers, we did say the stock plummeted quite a bit. Off the day's high, though, for now, 1% of losses seen, 80.5 rupees for the share price. Okay, moving on, Rajesh. Today we are waiting for ONGC's results as well. Ahead of that, anything that you're observing? And, I think gas stocks in general are having a bit of a tough day today in trade. So what would be your recommendation here?
So if you look at the technical setup, stock is in weak territory across all the time frame, and stock is continuously forming low top, lower bottom formation on daily as well as on the weekly chart, which is adding up the weakness on the near term as well as on the short term. And looking at the derivative data also, stock is continuously witnessing a short built up in the stock. So I feel we can see further more weakness in the coming trading session, and maybe stock can slide further towards 198 level in the near term basis. So my advice would be to remain short in the stock. If any minor pullback action comes in the stock, 108 would be the appropriate stop loss to go short in the ONGC from the current level.
Okay, sell on ONGC from Rajesh. We need more result reactions. Natco Pharma, how is the street reacting to this pharma company's third quarter numbers?
Mubina, this has been a weak set of numbers for Natco Pharma in Q3. Now, let's look at the revenue. It's at 482 crores versus 556 crores on a year-on-year basis. That is down around 14%. Even the margins have contracted, and, they are at 26.7% versus 37.4% on a year-on basis. Profits have also declined by around 35% on a year-on-year basis. Now, the company has continued to face pressure on its margins, and it's mainly due to the hepatitis C portfolio, which is affecting the margins of the company. But overall also it has been quite a weak environment for Natco Pharma, and that's why we are seeing, the stock also being impacted due to the Q3 numbers, Mubina.
Okay, well, Natco Pharma certainly is gaining losing in trade today, 5.6% gone. But we have Welspun Enterprises as well. And Soumya, anything spectacular over here? Because I do see revenue growth and EBITDA growth, but profit after tax is down.
Well, yes, exactly, that's right. So I would classify it as a mixed set of numbers. A revenue growth of around actually 13%. Profit was actually down by over 36% on a YY basis. So there was a little divergent trend here. However, the margins pretty much were stable within a slight upward bias at around 10.9% versus a 10.4% in the previous year. So having said that, there was a mixed set of numbers, but a good revenue growth and a EBITDA growth probably is trailing the markets.
Okay, stock price then of Welspun Enterprises is higher by 3.7%. Dr. Reddy's, yesterday, of course, we had that all-important news that Dr. Reddy's will be buying out certain units of Wockhardt Limited. And while Wockhardt was a bit weakish in trade, take a look at the move seen in Dr. Reddy's. In fact, as we speak, the stock has actually scaled the day's high at just about 3,300 rupees. That's the level we may see the stock trading at very soon. Nomura has maintained a buy. They've kept their target at 3,684 rupees, as they believe that the extent of value accretion, though, will totally depend on stalling the declining sales. So that is something that they will wait and watch out for, whether Dr. Reddy's is astutely be able to do that. Morgan Stanley, meantime, has maintained an equal weight, as they believe that this acquisition demonstrates the company's intent to strengthen. Like I said, stock prices at the day's high. All right, and Rajesh, like we've been flagging off, United Spirits, a nice steady up move is what we've been witnessing here. Where do you see it go?
Yeah, this is the third consecutive week we have seen, a strong run up in the United Spirit, and throughout this FAB series we have seen, long built up has been there in the United Spirit. And looking at the chart pattern, stock is trading above all its important moving average, and on the monthly chart also stock managed to give its down sloping trend line breakout. So looking at the overall setup, I feel that stock will continue its uptrend, and 725, 730 target can be seen in the near term basis. So one can keep a stop loss of 678 to go long to buy the United Spit at the current level for 725, 730 target.
Okay, so go long on this one. Stock's already crossed 700 rupees. Keep an eye out on this. And Vinny, NBCC, how are the third quarter numbers for this one?
Mubina, one more company with a weak set of numbers this time, and we are seeing that the revenue is down by around 21%. So the slowdown impact, everything is continuing to impact the company. Even the margins are only at 1.3% merely versus 2.9% on a year-on-year basis. Profits are also down by around 41%. So surely we are seeing an impact on the company of the slowdown, as well as pressure is continuing on the company, as well as on the stock. We can see today also is under pressure.
Yeah, 2.5% down. Soumya, anything spectacular on Info Edge, and what does Goldman have to say post it delivered its third quarter numbers?
Well, Mubina, this one we have Goldman maintaining a neutral on the stock with a target price of 2,520 rupees per share. Well, what's worth flagging off is the fact that they've said that they marginally cut revenue estimates for Info Edge, and they believe that the medium-term outlook, despite this marginal cut, is actually remains robust. They're forecasting 17% of FY 20 to 23 revenue CAGR for the company. So, given this fact, they overall remain robust as far as the company's outlook is concerned. However, they marginally cut their revenue estimates for Info Edge, and probably that's somewhere what's adding to the pressure in the stock scene today.
3.9% gone for Info Edge. But with that, we're out of time. So Rajesh, Vinny and Soumya, thank you so much for joining us on this shortened edition of Market Fatafat. Stay tuned. Closing trades is up next.